Hello and welcome to this week's edition of the Capital Edge Tip Line. I'm Chad Braley, the CEO at Capital Edge, and as promised from last week's Tip Line session that went out on Thursday, I promised to talk a little bit about the updates to the DCAA Audit programs that were quietly under the radar, where everything else has not been under the radar in the first almost quarter of this year, have been updated and modified on the DCAA website. We posted that on the Capital Edge LinkedIn as well, just from a notification standpoint, but wanted to bring some highlights to attention. So we're going to talk a little bit about DCAA audit programs, certainly address GSA taking over procurement, and also a little bit around some recent USAID guidance, which we'll get probably more into detail in next week's tip line. So from a DCAA perspective, right, there were 30 audit programs that were we've got some new ones and we've got a lot of revisions to existing ones. There is an expanded home office allocation, home office cost audit program, which is actually pretty lengthy and directs auditors to really look at the material impact of these allocations down and the government's participation and how they flow down to the different business units and segments of an organization based on materiality and flexible price contracts within those business units. So that's a pretty lengthy addition. There's also a new one specifically on FAR 31-205-33, professional and consultant costs, which is a shorter version, but obviously that's an area of focus and interest from a DCAA perspective. But on the accounting and estimating system side, so we have some new things going on there. One of the other things consistent throughout the programs is per the January 17th final rule, significant deficiency is now fully defined within the audit programs as material weakness, which is a good thing. And then we have estimating system and accounting system follow-up audit programs, which are specifically designed to be used when there has been a finding of material weakness within an estimating system or an accounting system review, and the contractor, right, you would be implementing a corrective action plan, implementing that, and then DCAA is going to use whether it's related to the accounting system or the estimating system, follow-up program to evaluate the implementation of the corrective actions and the validation that all of the material weaknesses have been addressed. We also have a new estimating system audit program, which is not organized by cost element like the current one, but actually organized by the 17 different DFARS criteria. And that one also directs the auditors to not only look at, pull samples from price proposals, but also pull sample BOEs for different cost elements. That same language is incorporated into the existing estimating system audit program, which is organized by cost element, not necessarily organized by the 17 DFARS criteria, but provides the continued same direction to not only pull samples from price proposals, but also to pull BOEs by cost element, labor, materials, subs, ODCs, and take a look at the buildup of those from a validation perspective. Both the accounting system and the estimating system audit program. So right now we have two estimating system audit programs now. Not a ton of clarity in the immediacy of which one are we going to use in which circumstance. Obviously, the follow-up program is clear. We're validating implementation of corrective actions. Both accounting and estimating, and the new ones remove the auditor's direction to evaluate any COSO framework. On the accounting system side, there is some more detail on directing the auditors of how to pull different samples for different cost elements that they're going to review as part of that audit program. Also removes any testing of executive compensation through the accounting system audit program. One can only assume that's going to remain and will be tested through the inter-cost audit program. So some new things going on there. There are some other programs as we continue to kind of do a side-by-side comparison of past and present. We'll certainly keep everyone updated in terms of what's going on that front. I mentioned, and you've probably seen, GSA. So GSA is now going to consolidate acquisition services. They're saying they're going to move $400-ish billion, which is going to more than quadruple the size from a procurement standpoint of what the agency has been doing. They're going to manage these GWAC contracts, the administration of. So a lot of staffing up that's there. I think a lot of our clients, right, and over the years have had concerns just about the efficiency of GSA in general. And if we're going to put that many more dollars of procurement across all the civilian agencies running through there, is there going to be the volume of trained workforce that's going to be available to handle that? And so time will tell, but that's certainly moving, and it's going to be interesting to see exactly how those contracts are moved, and what kind of interruption does that cause for those contractors on some of these large government-wide acquisition contracts. Last but certainly not least, because I know we're getting short on time, there is some additional guidance related to foreign aid out of USAID, directing specifically on the grants side that if you have, right, you can start invoicing costs related to your stop work orders. There are payments obviously being made for work performed, both on the grantee side and the contractor side. The guidance that I saw initially, I think this will fall out to contractors as well, although potentially many of the contractors will incorporate those costs in termination settlement proposals for those specific contracts that aren't being continued. On the grant side, there is specific direct. You can go ahead and invoice for stop work order costs, right, under the regulations. So I would encourage anyone in that position that has stop work orders to move that to the top of the priority list, to not only put those invoices together, make sure we're not leaving money on the table, spend a minute getting some advice to make sure we're incorporating everything. If you need help, obviously feel free to reach out, but would certainly encourage that while the spigot is still on and funding is there and payments are being made, or they're willing to make those payments, to get those invoices in as soon as possible. Until next week, and I'm sure we'll have plenty to talk about next week. Hope everyone has a great rest of this week, and thanks for tuning in.